Hey folks, welcome to the 1st of March, and I can smell spring in the air. Unfortunately, the joys of spring are not going to be felt by people in the Ukraine right now. Just seen on Al Jazeera, there's a 60-kilometer long convoy of tanks headed towards the Ukrainian capital, Kiev, as we speak. And so we can really see now with that there is going to be a step up and a huge escalation of this situation imminent. So today, if not tomorrow. All right. So really, across the data slate, what we have coming up for today, really the biggest thing on the docket is 3 p.m. The U.S. ISM manufacturing PMI for February set to come in 58.0. So do bear in mind that the market is going to be way less focused on these economic data points right now. A lot of other things going on with this conflict in Ukraine right now. So let's go over, have a quick look at these charts. And what you can see is oil on the front foot now, topping out currently at 98.88. That 100 marker going to come under another retest today. Seems imminent right now. So, what we've seen on this is really, we had that Monday push up. Hopefully you can see that. And I'll just cut this area right now. So see the push up here on Monday, pull back to the gap top, and really generally supported on the gap top. And we're not waiting for a gap fill here. We are going for the 100 again. So let's see what we get. Look, target 100s. It'll be, I think with this convoy on the way to Kiev right now, I think this situation can get really out of hand. And I don't think we're going to be looking to fill that gap anytime soon. If we start hearing about shelling attacks today, so oil further upside imminent right now. We do have this trade area of 96.07s up to 102.72s, and if we get wild above there, big target 107.25s. I've covered this quite a few times, but this is this multiple low area on the top of my charts here, going all the way back to 2011. Double tap low in 2011, 2012 low, now we haven't tested it in quite a while now. So that is the target for oil. So looking across these equities now, looking into the NASDAQ and SPOOs. But you can see the NASDAQ did fill the gap yesterday handsomely and then some, finishing quite strong. The dip buying very healthy here. So we're going to turn this to gray. Any gaps that are still remaining open are going to be in yellow. You can see cable has closed its gap down yesterday. Euro not done it yet, and gold has traded it out there yesterday quite quickly. So we're just going to keep these areas in grey for now, just as they can be quite interesting as we go forward. So NASDAQ, let's see, a reversal down onto the 14.047's half should be supported. If not, I'd be interested in seeing S1 hold. But if we do have those shelling attacks from all these tanks headed to Ukraine, I really don't see equities taking a bid today on that. But once that gets priced into the downside, then I think we can start to resume the buying of this dip. But the DAX, going offward from quite an important area, 14,400 this morning. Is that a sign of time of things to come for the rest of equities? Pushing into new lows here in Euro stocks, new lows on SPOOs and DAX as I'm speaking. So I think there's a certain amount of pricing in the imminent attack from this 60-kilometer train of tanks. Look, the gap has filled on the SPOOs. Gap low remains down here about 4,300s. One thing that has been getting priced in now on this risk is nat gas. I think we may, if we do get this shelling underway today, I think this may, with this further escalation of violence on the ground in Kiev, I think we can start to actually really price in further upside now on nat gas. I said I was going to take a quick technical look at this today as to why we have been kind of drifting to the downside on nat gas. And from a technical perspective, on the weekly bars here, we have been relatively high. Looking over the last kind of 2 years in prices, we have been exceedingly high. So a little bit of pulling back on average pricing. I think needs to be accounted for. There is a gap here now that you see in, well, below here. I'll just remove it here, right? And we can take this sort of gap area here. Let's see if it comes over. Well, there it is below, actually. You can see that below there, or on the bottom. Sorry, I'll take my face off the screen right now. Just let me line that up. Here we are. So you can see on the screen here that we've kind of traded out that gap to the downside. I'll make that grey now. So I think we've pulled back here, but I think with that done, I think we can now start to get on and make new highs on this week and potentially last week as well. So that would be trade over the 4 spot 936. You got to be careful though. Right now, it's not the time to get long. It's testing this 4 spot 493s as resistance. Of course, that was the low, double tap low of 2017. So do be careful on that gas. It's not called the Widowmaker for nothing. You're seeing Tino is now pricing in the risk further upside here, trading 127.22 halves right now. You see this channel it fell out of. I think basically you can forget the channel. I think really we're just going to be trading back to this line in the sand, which kind of comes into play here at let me see, 128.9 and a halves above. So just kind of between R2 and R3 today. That seems really like where we're headed with this risk tool, if you like. And the dollar is just about closed its gap, not technically closed its gap yet. Another bit of downside. I would love to get a trade on the euro actually. They'll slip down to the bottom of the gap again, and then we move to close on the gap. But I can't really, with this, I can't see the dollar going tremendously offered down today, given that we have this envoy of tanks moving towards Kiev. So do be careful out there. You're seeing gold as well while we're looking at risk assets. You're seeing gold back to the top of the gap again, going offered down. You could argue that we picked up buyers here yesterday on the 1900s handle, and then got bid up from there. So I think any pullbacks on gold here should be bought in my view, and then stopping out obviously below the S1, but really ideally you'd be long around the 1900s and looking for a break up above the 1929s. All right, so that's kind of it for me for today for this analysis. Do click to like and subscribe, and be careful out there. I think we're going to have an extremely volatile day. I would get your VIX chart up, especially if you're going to be trading equities today. Anyway, have a good one, and I'll talk to you tomorrow. Cheers.